So let's talk about Bitcoin and cryptocurrency today. We've been seeing quite a bit all over Twitter for the last, most of this year. People just saying, "Oh, wait till the next super cycle." Buy the dip on Bitcoin. It's just a bear market. Don't worry because there's going to be another super cycle. And it got me thinking, why do people think there's going to be a super cycle as if it's guaranteed like that? So let's talk about that today. I guess to start off, Gamma, do you think we're going to get another super cycle?
Yes, I do, and I think that the belief for the super cycle or these Bitcoin super cycles comes back to the idea that historically, if we scroll out on Bitcoin, we take all of our indicators off and whatnot. Anytime the price has been substantially lower, it was a great buying opportunity and led to these bull rallies where prices have exceeded the prior highs. And a lot of people, they see this as another buying opportunity. And the way they can justify this buying opportunity is by putting another super cycle in front of these current prices and say, listen, if I buy now, we're going to have another event where we're going to see all time highs and higher. And that's what they would call a super cycle. Now, when we look at Bitcoin as a whole, it's very hard not to have a super cycle, right? So if you were looking for a super cycle to happen, it's very hard for it not to happen when the asset you're talking about is deflationary in nature. So as Bitcoin gets more and more popular, as it just has, obviously we're off the popularity peak here from 70,000 or 69,000. Everyone's knows or talks about Bitcoin now a lot more than they did just 2.5, 3 years ago. It's obviously larger in popularity. The next time it moves, it's going to have more eyes on it. And now, when you have something that's deflationary in nature, that just compounds in basically viewership, and more eyes are on it. The next time it moves, obviously, more people are going to watch it. And more people are going to expect some type of move, as we saw earlier. This in the last literally a move within the last 5 years, they're going to expect something similar. And since it's deflationary, it's just more eyes around fewer items, and again, that's going to just lead to bigger and bigger moves. So
But
as
it
long as
it really felt like all eyes were on it in the last bull run. So in order to get a bull run that's higher, so surpassing its previous high of 69,000, you would need more eyes on it, more confidence in it than we already had. But
right,
I feel like it was mainstream last time.
yeah, it was mainstream to a degree, right? So like it wasn't until the end of this run where like the big institutions started accepting it, and even Fidelity started offering Bitcoin as an alternate investment, and 401ks and retirement plans were offering it. Right, that didn't happen here. That didn't happen at 12,000. That happened at 60, 70, or anywhere from 50 to 70,000 is where that pretty much came out. Now, obviously, right? The move is compounding in nature. So the people who saw Bitcoin go from 6 or 7,000 all the way to 70,000 are gonna see Bitcoin move from whenever this starts moving higher from 16 maybe to 24, and it's a compounding effect, right? So the same people who saw Bitcoin move from 6 to 30,000 are gonna say, or 70,000, excuse me, are gonna say, well, shit, I saw Bitcoin go 10x last time. So does that mean Bitcoin can go from 16,000, 17,000 to 190 to 100 or 200,000? And that type of move obviously is fueled, right? By there just being more people. It's not like there's that much more Bitcoin in the market that's going to deter that move from happening. Meaning, it's not like the supply of Bitcoin has quadrupled or even tenfolded. So you're going to need 10 times the amount of people to really push a move from this price 10 times higher, right? Because the amount of Bitcoin supply hasn't really changed since 70,000. Excuse me, 69,000 just call it a little over a year ago. So
Yeah.
if what I'm trying to say is the price going up 10 times and the supply are not equally correlated, right? We have the same amount of supply. If we just get double the amount of interest that Bitcoin had a little over 2 years ago, well, it's easy for the price to be at 100,000, because it's not like the supply has increased so much that two times the people is not going to increase that demand substantially,
Hmm. Okay.
right?
So the million dollar question. when will the next super cycle happen?
Okay, I think that's a good question, right? So it's something that a lot of people are wondering and curious about, mainly because there's a big difference in buying Bitcoin at 16,000 and it going up 100% to 32,000, and then buying Bitcoin at 8,000 and it going to 32% at 32,000, which is 400%, right? Or 4x. You could either buy it now, it doubles, wait, buy it lower, and it can quadruple. That's the big question, right? And that primarily comes back to the rate of the environment of which risk occurs. So, do we get a risk on environment relatively soon, which can last anywhere? Obviously, each regime, its duration is up to the regime itself. It's not like regimes are predominant in a certain occurrence, but historically, we've seen more risk on regimes than risk off because over time, the equity market of risk assets has gone higher, right? So, if over longer durations, risk assets go higher, it's most likely going to be that there's more of an occurrence of risk on regimes, right? So you are betting in favor by saying Bitcoin's going to be higher at some point, right? From here, yes, because there's going to be a risk on regime that can launch Bitcoin. But the problem is the risk environment doesn't favor Bitcoin just yet. Reason being, Bitcoin's a risk asset, right? Bitcoin is not when everyone's afraid uh, buy Bitcoin, and the reason this is because Bitcoin's it's revolutionary tech, right? It's tech beyond um, really our cope of integration and understanding today, and it's seen as an experimental to some degree, right? Because major infrastructure isn't run on this. So if risk is in a shitty position, this is going to feel pain because this itself is a it has exponential rewards because we're not integrating it yet. Meaning, we're not using Bitcoin yet, so the mass adoption of it would send the price a lot higher, but you're not going to see that mass adoption happen in a risk off environment because in a risk off environment, confidence is very subdued in everything, right? People are afraid of recessions, people are afraid of buying food, people are afraid of all these other things, paying for their mortgage. They're not so interested in testing out um unproven or call it.
Right. They don't want to
Yeah,
take on the risk of something new and they don't know what the outcome is
exactly,
going to be of it,
exactly.
right? They don't want to put their money into something like that during times where money is important.
Right, exactly.
It's not helicopter money anymore. We're not in a
Oh
helicopter
no.
money environment anymore. So, I guess what you're saying is there isn't really so buying and holding isn't really the strategy for taking advantage of Bitcoin. Is that what you're saying?
Yeah, so Bitcoin is simply put, everyone wants to call it a store of value, which is fundamentally disproven, right? You can't have a store of value that that fluctuates in this manner, right? What store of value could be down 80%? There
Yeah.
is no store of value. That's not how this
Yes.
works,
We
right?
had that disproven and we had the inflationary play disproven. At the end of the
Right.
day, Bitcoin is not an inflation hedge, as we can see right now. It's a risk asset. It's one of the
Right.
riskiest assets that you can own.
Yes, and primarily it's also not a currency, right? That's another thing that we have to get out of the way.
Right. Yeah. So everything
You
that people have been saying leading up to now has been wrong. As someone who has been sitting on hands waiting to see what to do and waiting for the next Bitcoin super cycle, what's the best way to trade and catch that move without taking on too much risk or getting in too early and taking a
right.
huge loss?
Well, that's a good question because obviously, right, the the biggest fear here is missing that move to 70,000. That's just, well, I'm just rounding up to the prior highs. It's really 69. We'll call it 69,000, right? Missing that move from 17 to 69. That's like a massive move, right? We're talking, I mean, you could just break out the percentage. We're talking about over 300%. Okay.
Yeah. So, like, how
Now,
does someone take advantage of that, but also know that they're getting in at the right time? Whereas right
Right.
now, 16K, we could easily drop 50% from here.
So the best way to play this is wait for a risk on regime. And once we get a risk on regime, it's very simple from there. We're not going to go to 69,000 without going bullish trend. This is the best part about using DDAP, right? We can see DDAP, obviously every time Bitcoin has made a substantial move higher. Before the bull run in 2021 from 7,000 to 65,000, Bitcoin went bullish trend at 9,000 or a little under 10,000, a little under 9,000, and that bullish trend went all the way up until the regime shifted somewhere here in April. The regime actually shifted before Bitcoin shifted trend, so that was your early indicator to get out. So you pretty much captured this whole move just being in within the trends and
Right.
within the
So
regime.
so by doing that, we would have to wait to go above Momo. So it's not really a strategy for buying the very bottom.
Simply put, if you're trying to buy Bitcoin, understand that it comes down to the risk environment you're in. If we're not in a risk on environment, it's going to be very hard for you to make large amounts of money in the space because again, this is a risk on asset. So as long as we're in a risk off environment, this is going to be unfavorable. So you're going to want to wait to see a bullish trend within DDAP on Bitcoin and a risk on from a regime perspective. And that will yield the best results when buying Bitcoin and other
Right.
cryptocurrencies.
And that's just such a much more mathematical smart way of approaching it versus what all these crypto boys that are recommending of just hodling, just buying and holding and just kind of hoping for the best with no real strategy behind it. You don't have a stop loss. There's really no real strategy. And
Yep,
the next bull run, it's not guaranteed. Nothing is guaranteed in life.
Nope.
And so kind of just basing your whole investment strategy on that, it's not very smart.